trades I'm in. If you're wondering what trades I'm taking and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Thursday. Markets all excited with a little Meta and Microsoft leading the way with MAG7, both showing some solid earnings. Microsoft especially, top three companies ripping to the upside. Had a nice little winner today on Microsoft. That was, so I put in an earning, or it was an earnings based trade, and I basically did debit spread. It crushed it to the upside, $1.30 with a max profit of $2.50. I closed it out this morning for $2.40. So took out all but 10 cents of profit on the trade. Net, pretty happy on that. I also closed out some shares of the SPY this morning. I bought shares at $4.96 on the SPY. I am closing out some shares. I know that this may head up a little bit higher, but I don't know if we're going to all-time highs, and I'm not going to take the risk. I had a nice little chunk of profit across the board, up around 13% of this recovery, and I'm taking it. So just in case, this has been a great run. I have de-risked, de-leveraged quite a bit. I'm now sitting at 1.7. I mean, my gosh, at some point I'm going to look at this and say, like, I guess I need to deploy some capital. But 1.7 out of 3.1, I'm at 54% cash in my portfolio. So that's okay. I mean, it's been a de-risking, de-leveraging, take profits along the way. This entire run has been pretty lucrative. So had a nice little bounce back, a lot of accounts in double digits, and pretty happy with that. Taking some nice, daily income as well. This is the trade that I set up this morning on the SPX. Price was cooperative. SPX surrounding it with a call side, put side play, and I grabbed about, I guess I got $1.05 net per contract. So, or I guess I take that back, about 50 to 55 cents per contract. So anyway, grabbed a couple bucks there, and that's it. Like this green line that I mentioned early in the week, this is a gap fill from the 2nd of April, and this red line is a gap fill from the 22nd. So the market keeps humming along. Recovery, oh so great. But I do wonder with MAG7, again, today we have Apple, Amazon. They also could give this market a late boost. Then we have non-farm on Friday. Is that going to be a bit of a head fake? I mean, yesterday was certainly a head fake. You looked at negative GDP, then you had the core PCE. I don't know who the heck said it yesterday. Somebody in the administration said, like, it was the best negative news I've ever seen. It's like, I don't even know what that means, So it's certainly the age of spin right now. The current administration is trying to make everything sound like it's not their fault, right? I think literally Trump in 100 days of office, whatever he was doing yesterday with his little tour, took to Truth Social, is that what it is, and said that this is Biden's market, when literally he claimed that it's going to be Biden's market, or it's going to be Trump's market because he's taking over the stock market. It's going to boom. It's like, the guy is human Teflon. If you can picture Neo dodging bullets, that's what Trump's been doing since 2016. But hey, whatever. So I just don't think the coast is clear. I'm super happy that the market has not just been beating up these lows and we're just sitting here struggling with like red and red and red. I mean, this is fine. All I'm saying is just be prepared for this market to not just go straight up. Okay. I mean, if we go to a V bottom, I'll just type it out. Like, if we go this level, pull back, and this is a cup and handle, and this is going to measure out to be a cup and handle, we get to these highs, anything to the upside, I'm not going to short that automatically. I'm going to hedge it. I'll probably hedge it out for 12 months. But I would say that this is going to be asset bubble territory. So not immediately at the all-time highs, but higher. Like if we get to, I mean, look, every major analyst, every major investment firm had like 6,500 S&P, 6,900 S&P, 7,000 S&P. Those have all been revised down to like maybe getting back to all-time highs is going to be the target for the year, right? And the markets do whatever they want. Like at the end of the day, look, the markets are right. You're not. right? You are either right or wrong with what the markets are doing, but the market's always right. So if we get into all-time highs and higher, I will just be, kind of patiently waiting for some type of topping pattern. It may be something I've got to look out 1 or 2 years, but I think we're going to go into another kind of an asset bubble. And again, I don't know what that catalyst is going to look like, but I just know earnings can't sustain these like all-time high valuations, especially if it's a narrow bull market. So that's the one thing we are having right now is it's not every company that is leading the way. Right now we go to market breadth. That would be, I think it's S5 right here. So the S5FI, the stocks above the 50-day. So we went from basically 4.5% of stocks were above the 50-day to now 42% of stocks above the 50-day. Okay, how many stocks are above the 200? About 35, almost 36%. So we still, I mean, by and large, if we have a 200-day moving average, which oftentimes serves as a massive buy zone or sell zone, we still have most companies below the 200-day moving average. 65% of companies below the 200-day moving average. That is a bear market indicator. So if this is a recovery, I do wonder if there's another pushback down. So that is why I'm taking profit. That is why I'm protecting, some nice gains off these lows. I mean, we're up like 16, 17% off the April 7 lows. I know not everyone called that low, but it wasn't awful. I mean, we saw previous highs in S&P would have been January 2021. There's your high, right? Or I'm at January 2022. So there's your high. It would have been November of 2022 or November 2021 in the Nasdaq. But that previous all-time high was a beautiful technical support level. I did get in shortly after that. I mean, we bottomed. I got a 496 fill on SPY, and I benefited through most of that run. So SPY at 496. So right in here and up around 13%. So I didn't miss much. I think that's pretty good timing. And just in case we have some gap fill, maybe a gap fill, maybe this 200 moving average is going to act as some resistance. Maybe this is the bear trap or the bull trap that I talked about, which is a low to high, higher low to higher high. We run into some symmetry. This to me would be like a bull trap territory. Look, if I'm wrong and prices just continue to melt up higher, that's fine. I will still make money. Okay. What I don't want to see is have potential profit and a lot of option trades that are looking really good, and all of a sudden the market turns south and VIX goes up, and all of a sudden things kind of blow out a little bit. So I'm closing a lot of profits. I am lowering my beta weighted delta. So this is one of the lowest I've seen in about 6 months. So that's good. A lot of cash ready to deploy. That's good. So anyway, and I did have a close call yesterday. It was I'll just be quick on this, but basically I run a session every afternoon from 3 to 4, call it the final hour. And usually I don't have a ton of trades going into the afternoon, just kind of a recap of the day and trades and what's looking good. I'll try to find some fresh trades. Anyway, yesterday with this market on GDP that was negative, we were down 2.2%. All right. As the market was correcting, I thought, okay, I could see the market, maybe coming back up like all day, just kind of slowly grinding to the gap, but then, fill the gap and reject. Well, it did. It just happened to do it in the last like 30 minutes of trading. So, I mean, literally my final hour, 20 to 30 minutes of it was spent watching this thing just rip to the upside. And I did have some tops in there. I had a bear call spread, and I had a broke wing butterfly, and then I had a butterfly spread. So I needed price to stay less than 5,700. I'm sorry, 5570, my bad. 5570. 5570 is where I needed price to stay below. And the settlement yesterday was 5569.07. So, and it also broke above that. Like it was up to like 75 or 76, which the difference between me making about $250 yesterday compared to risking about $2,000 is it's right there in that final like 3 minutes of trading. So I was fortunate it came out on the right side of the trade, but it was an interesting 20-30 minutes to watch just because I was like, you've got to be kidding me. I was actually like in real time pretty pissed watching this, and I was completely helpless. Like I saw, my butterfly spread. I'm sitting here in this profit trap in the final few minutes, and I couldn't do anything with it. There was no way I could close it out, and it just had to settle in, and it settled like right at the end of this. But I ended up getting about $1 profit trap on top of the 75 cents that I pulled in for the credit. And my bear call spreads were safe by 93 cents. I had 2 of those. So anyway, crazy stuff. And then today we're just kind of melting up higher. This is the gap that I see that we possibly close. Close this gap around 56.70. Look at the daily chart. Go back to your 200-day moving average. We're right on it right now. So I wouldn't get overly excited about how much higher this market can go. We're at the 200. We have a gap level today. Tomorrow's non-farm payroll. Does this start a gap fill? Maybe. Right? Does it run up a little bit higher on positive non-farm? Maybe. But I would be really, really shocked to see this market come back too much further than maybe this support area, this previous March pullback area, this measured move from a low to high, higher low to higher high. So I'm just, like I said, I'm cautious in here. So I think if you have some really good profit, probably a good spot to be moving stop losses and taking it, protecting it. Just saying. Coca-Cola dropping hard, people fleeing safety stocks, perhaps. Why? I mean, you're fleeing safety stocks because you think it's going to be risk on. Let's check, shall we? So Coca-Cola had earnings, beat on top and bottom. It is dropping. I still have covered calls. I've rolled. I'm playing defense there. MO's another one. MO, covered calls. Pfizer performing a little bit better this week. Pfizer's off the lows by about 15%. I have hopefully some big plans on Pfizer out to summer of 2026. I'd love to see Pfizer in the high 20s or low 30s. Other defensive plays, I would even say Walmart could be defensive. Walmart has earnings middle of May. I mean, if we get to all-time highs, great. Otherwise, as a retailer, I know that Walmart and Target and some big like retail companies met with the White House and just try to say, look, man, we're going to have empty shelves in a recession by summer if this doesn't get fixed. So I think that's why the narrative has changed so much. I don't know what's going on as far as real negotiations. Okay, I'm not privy to that, but I still think at the end of the day, this is just between U.S. and China. U.S. and China figure something out. Global economy benefits. U.S. and China drags their feet. Nobody says anything. U.S. says, oh, we're dealing with them. We're talking to them. We talk to them a lot. I think that's crap. I think that's BS. But the deadline is going to be July. And then every other country will see how that negotiation goes. But ultimately, this is a standoff between U.S. and China. Gold is down quite a bit today. Currency strength, Japanese yen got smashed last night. So from around 10 to 11 p.m. Eastern time, Japanese yen incredibly weak today. And that is why I said at those recent lows that it looks like a high reward to risk trade if you're buying the yen crosses, right? So buying Aussie yen, buying CAD yen. I mean, it's like you couldn't ask for a better setup here to tag the same August 5th low multiple times, get long at 101, 102, 102.50. You got several hundred pips of upside. That's good. That's all I was looking for. Okay, Swiss yen, I don't like that one since it's risk off, risk off. Euro yen probably back up into the cluster. Pound yen scalping maybe if you're taking some scalps. New Zealand yen, same thing as Aussie yen. Benefiting off these August 5th lows. Dollar yen probably driving traders crazy, but this is what I said. Watch the lows to buy dollar yen. It's as long as you're using like area 1, area 2, we're probably going to head back up into this 148, 149, 150 zone. Looks like it's doing that so far. Uh, 10%. I mean, I don't think it dropped that much, dude. I mean, from yesterday's close, it's down like $1. So I've got from the recent high, but a 4% move on Coca-Cola, and that goes back to the high in April 22nd. So I'm not sure what data you're looking at, but Pepsi maybe, I don't know. Pepsi's still down. Pepsi's dropped a lot. Pepsi's dropped, 8 or 9%. Coca-Cola, I just think is better position and it's cheaper. I like Coca-Cola better anyway. And this is at the end of the day, this is a range trade. I mean, Coca-Cola has never been one that runs and impresses you with price action. So if we have highs and Coca-Cola comes back down into the midpoint or comes back down to support, I still think this is a buy and hold. They also have water. Like Coca-Cola, I think Dasani's Coca-Cola. It's like, well, sometimes Coca-Cola around the world's cheaper than water. That's sad, but it's true. But they also do have water. So anyway, if we ever think about like, oh, people are gonna stop drinking soda, that's fine. They should be big companies like this should be making alternatives. You know, everyone knows Coke Zero, Coke, Diet Coke. It's terrible for you. You know, but people still drink it. It's cheap. Anyway, it's to me, it's a stock. I've given up on the ESG tilted portfolio. I think that's greenwashing, as they say. So I'm just interested in taking trades to make money. All right, let's go currencies really quickly. I'll kind of go backwards. Usually I end with currencies. I'm still looking for dips and pullbacks in Aussie CAD, meaning this low, this high, looking for a fib swing in here for a third wave move back up into some resistance levels. So I still like Aussie CAD long. Aussie Swiss long still holding. Aussie yen long, if you're buying out these August 5th lows, I know it was a little bit of a crash through them, and that's always tough. Like, this is why I trade small. I mean, this was a good spot to start the process. The bottom got caught and it is responding. But taking this trade with a stop loss, you have no idea. It's like, oh, I'll go a 1 ATR below the lows. It's like, it's not safe enough. It's like trade small and let the drawdown fluctuate. Sometimes I'll give myself 1, 2, 3% drawdown. If I'm trading small, it's like I give myself on average about 500 pips of breathing room for most of my trades in Forex. That's a big window. I mean, I'm like dead wrong if I'm seeing prices go 500 pips through my levels. And a lot of times if I'm trading major highs and lows, they tend to respond at those levels within that. Okay, Aussie New Zealand responding, Aussie dollar. We're getting a pullback here. As I suspected, I think the Aussie dollar pulls back. It may offer up another swing trade, an open space. It might also be just noise. I mean, who knows? Maybe the Aussie dollar is going to settle back in. I still like the lows at like 6,000, but I just don't think there's a clean trade on it right now outside of you bought the lows and protected profit in this chop at 64. CAD Swiss looking better. That's good. I'm long CAD Swiss. CAD Yen, probably one of my favorite trades the last couple of weeks looking at the yen crosses because it's been so cooperative at the August 5th bottom. Same bottom. Really nice spot to buy in around 102. No trade on Swiss Yen. Euro Aussie. If it gets a pullback, I'll still look at a swing trade. If it just continues to slide lower, I'm not going to chase that thing and sell the lows. That's my least favorite thing to do in Forex is, buy highs and sell lows. So I'm not going to chase that. EuroCAD is looking a lot better. The structure's broken. Multiple opportunities to sell these highs. And I would say if you are short EuroCAD, looking to come back into this cluster around 5,400. If you get to 5,400, trailing stop loss will work. If it goes lower, excellent. Previous highs could be a good spot to protect profit. Just don't be greedy on that one. If you're entered in around like 57 or 56, I mean, a 200-300 pip move is pretty good moving stop losses. Euro Swiss looking a little bit better. This would be, I mean, I'm hoping that with these lows, we come back up to these highs. And if we do, great. If this is a swing area to get a third wave move, I'll still watch for a potential bottoming pattern. The trick is like, this isn't necessarily let's say like a crown pattern because there's still equal lows here, equal lows here. So if it's just a range, I mean, oops, wrong button. If it's just a range from lows to highs, I'd still like to see if we can get to this high. That'd be like target 1. And if we can break those highs, then I'd measure a target 2. But at the very least, like a 1, 2, 3, and I'd be getting out of this trade for as much profit as I can take. Euro pounds, robots is doing work there. It's starting to. It's basically you'll find an equilibrium after this ridiculous blowout move. Euro yen, I didn't like that one because we were off the lows. This would never position the same way. This got so strong because of the dollar weakening. This one did offer up a good trade, but it was timing wise. It was not the yen basket. This was the euro and the dollar. So there was your chance to get long euro dollar. It was way earlier than what we're seeing now with those recent yen lows. Euro New Zealand, same as Euro Aussie. If we pull back and slide lower, that's a good swing trade. If we continue to go lower, I'm not chasing it. I'll just stand aside. Euro dollar should be pulling back. Is anybody short euro dollar? So I said if you're shorting euro dollar, area 1, if it revisits the highs, area 2, I like shorting this, and it's pretty clean. A 23% pullback, a 30% pullback, 38% pullback, pockets back here, 50% pullback. Yeah, it's a good looking trade. Do I want to be crazy aggressive on it? No, but I'd say like a 30 to 38% pullback is still going to offer up maybe 2 to 300 pips. I do like that trade. Pound Aussie. I mean, maybe something like this. High, low, some indecision, and then maybe it breaks later. Alan, what do you got there? Short European or Euro dollar. Nice pullback, 112. Yeah, there you go. Yeah, I like short. I'm trying to take it down into probably the 111.50 zone, 110.50 zone. That'd be like pretty conservative, but I think those levels get hit. If we go 50%, you're talking, 108.70, 108.80. So I just round that to 109 and say if we get to like 110.50 or 109, that's a pretty good spot to be, trapping profits pretty tight, moving stop losses. Pound Aussie, pound CAD, turning a little bit. Pound Swiss, still looking good to the upside. I still think this runs up into 112.40 or 113.70. If you like pound Swiss, I do. So, in here for area 1, if it pulls back into the bottoms again, area 2, but just wouldn't be surprised if this thing just recovers, find a pocket, find some profit. Pound yen, if you're scalping, this one also didn't come back down to the August lows. So never really offered up a great trade. It's just been chopped through this high to low. That's why I said it's not been my favorite trade, but I know a lot of traders like to scalp pound yen because it is volatile. Pound New Zealand, I don't think this is the pullback. I think we have a low to high, higher low to higher high. That would be a better pullback to look for a short if that's offered up. Swing trade, there's your risk. There's your reward type trade down to the 200 moving average. Pound dollar should be pulling back. I thought euro dollar was a cleaner trade, although it is sitting here on pound dollar back up at same resistance levels. If you're shorting this, okay, so small trade and then reserve a second trade at the top and see if this settles back into, this area, anything. I mean, maybe it's just a big range. Does this come all the way back down to these lows? I don't think so. But even if it settles into the middle of that, there's still a lot of area to be kind of short near the highs and see if this cooperates. New Zealand CAD, getting the pullback that I want. I'll be looking for a kind of a 50618 swing and see if this will have another symmetry play to the upside. 3 to 5 waves. New Zealand Swiss, looking a bit better. Still waiting to kind of identify my bottoming pattern. It may not be anything more than this. This might just be like slowly working its way higher, getting back to equal highs. Then we get a pullback. Then we get a 3-wave move. That is enough. That's enough. That's plenty of profit. Plenty of profit if we get another swing higher. I mean, heck, if we go all the way up to this high again, I mean, I'm going to see probably another 200 to 300 pips of profit on my core position. So that's enough to say I could probably take some profit and then just reestablish new positions. So I'll keep watching that. New Zealand yen. If you had the courage to buy this thing with Aussie yen off the August 5th bottom, it's rewarding you now. New Zealand dollar pullback was expected. You're getting it. The best trade on New Zealand dollar was if you bought low, cleared these highs, trailed your stop losses. That was a great trade. On the pullback, I don't know. I mean, pullback if we go low to high, pullback here towards maybe a 50618-786 zone, something along this line. If we have open space trading, I mean, if the dollar gets weaker again for another wave, we could still get into like 63, 6400. But I be careful on the dollar. Like the dollar stuff, there's like big themes. There's broken correlations. Gold is dropping today. Dollar is up. Dollar CAD, still don't love it. Dollar Swiss looking better. I'm trying to get dollar Swiss back into like 87, 87.50 to 8800. Dollar yen, actually offered up a pretty good entry if you were long. So equal lows in here, equal lows in here. It wasn't an easy way to call the bottom, but it did not do too much damage below this low or this low. And now it's up, 300 pips off the bottoms. So it's got a good little run, pulling back into this like cluster, possibly getting back to like the 148, 149 handle. That's not a bad spot to be taking some profit. Okay, that has covered all the currency pairs. Let's go dollar index, gold, silver. I did get a trade yesterday on CL that I'll talk through. So let's go dollar index. Dollar index is responding. So if you're following this on a smaller time frame, like a 4-hour, okay, I said the 4-hour chart could be pulling back towards the 200 moving average. It's right there. So is it a little, swing? Sure, maybe. Would I call the top of that? I mean, see if it behaves. If it breaks down, stop loss above, perhaps it revisits the lows again. But if it goes here to here to here to here, wait for this trend line. You've got dollar longs in this area, and then wait for confirmation to realign, sell above, and then revisit the lows and see if it trends lower. If the dollar is going to continue to weaken, there should be a good clean trade on it. There's lots of resistance back here between this like 102, 102 to 103 zone. Lots of resistance. That's if we were to stay pretty persistent, on a retracement. That 102 to 103 handle on the DXY, I mean, that makes a lot of sense to roll over. But until then, the dollar could see some relief. Okay, so that's dollar index. Oil, nice little bounce off the lows. CL showing some profit. I did take a trade on CL it was basically a pending order that I put in my Pulver alerts. They got filled. Here's the trade. So I bought a 57 put, sold a 56.50 put. That's a little profit trap. And then I sold a 56 by 55 bull put spread. Right now, that trade, this is a 1111. Right now, the trade it's about break even. This is out to June. Basically, if we hold the lows, I'll make $150 on the trade. There is a potential profit trap that pays me $500 if we're going to be sitting near the lows. The best trade is I just want to take it for $150 and have it be an income trade. So that was the fill from yesterday. Would I consider shorting oil? No, I'm not going to short oil. I'm going to take a stab at it to the upside. I'm going to see if this level will respond. Usually oil tends to be seasonal. So in the summertime, oil prices are elevated a little bit. There's more demand for it. I know that there's been talks of Saudi Arabia boosting production, but we also know that based on the demand, I mean, you can't really drive prices too much lower than like $55. Anything lower than that, you start to see countries that can't produce oil at a profitable level, margins get really thin, and nobody's having fun making oil, making no money. So I think at the very least, it's could. I mean, hopefully this holds, but a range trade that comes back up into maybe low 60s. I think once we broke this floor, that's a key level that was broken for multiple months. And if we come back up into the 60s again, like that should be enough for me to take profit on my 111 trade. And that's it. Like, I don't need to do anything special. I just have to find risk. But I'm not going to short oil. If I was going to short oil, I better see a rejection here. I'd have to short this thing at like 64, 65 and look for a rejection. Otherwise, not going to short it. Natural gas. I'm going to see if UNG can get back above the 200-day moving average. Let me set a chart alarm here around 18. I'll go 1880. Back above 200-day. Okay, see if we're back above the 200 moving average. Gold is finally dropping. So high, low, lower high, still kind of working through. I think we at least hit a symmetry mark around 31.38. If we go a little bit lower, if this is a kind of a head and shoulders type measurement, then maybe down to like 30.28. So I'll just round this. I'll say 31.40 to around 30.30. We'll just say if it overshoots that round number at 3,000, to me, those are good spots to start to reposition and buy some more gold. I do like more gold. But I have been patiently waiting for this to pull back. I think also some of the safe haven flows we've seen in gold have been given back a little bit because we are seeing a nice little rip in the markets. I mean, we've got the German markets responding, almost back to the spot where we broke down during Liberation Day. The U.S. markets have responded nicely off the April 7 lows. So I think gold is just getting a little bit of a pullback, but I'm sure there's plenty of central banks that are still willing to buy gold. Obviously, if they get a discount on gold, they're going to be happy too. So this high, I mean, gold's down about 7%. 7 and change, 7.8% off the recent highs. I'm looking for corrections on gold, potentially about a 21% correction. I might be crazy to think that, but technically that's where I want to buy it. I mean, if I get like a 10% correction, cool, I'll start trading it. If I get a 20% correction, heck yeah, I'll start trading it. But I'm not. I mean, if we go to all-time highs again, so be it. But area 1 and 2, I mean, that works for me. Make sense? Okay. So I hope gold continues to decline a little bit. All I'm going to do is waiting for opportunities to find some support, start positioning on GLD again, start positioning on gold futures. Pretty simple. If it doesn't, and all of a sudden it's like, yeah, that's it. High, low, lower, high, lower, low. And that's it. Well, I guess I'll still benefit from that. And I just won't get the entries that I want. But meanwhile, I still have silver. Silver, I just want to see if it breaks this 34.88 alarm. This would be kind of a nice resistance zone to break out of. We could have a longer range. Could this come back down here? Yeah, it could. A lot of things could happen in silver. But if we hit this low, I'm probably going to buy some more, or at least add some more exposure to it. I think that's a good income trade. If it breaks this resistance, that to me is where silver really gets exciting. Above 35 is where silver gets really exciting. Bitcoin off to some fresh highs, 96.5 and change. I'm not going to adjust the fib just in case this drifts a little bit higher. I think this was a relatively good swing here off these lows. Again, I would be a little skeptical if Bitcoin comes all the way up to all-time highs without having really any pullback. Don't be shocked if we do hit resistance and we come back down into either this halfway point, or possibly down to range lows again. So 1 and 2. Right? If Bitcoin goes up, that's fine. It's fine. I don't mind it at all. But are we breaking, if we get to 108, 109, are we actually breaking to go higher? I mean, I'll give it a chance. If it's more accumulation, we got to be ready for this. There's a swing. Is it going to be accumulation before we go higher? Or is it going to be, there's your swing, there's your pullback, and then here we go making highs again? I don't know. But either way, I still like a kind of pro Bitcoin bullish stance. Mostly exposed through IBIT and having my Coinbase exposure, Ledger. I've got some cold storage wallets, but it's kind of nice to have it securitized and actually be able to trade it for clients now. But anyway, we're doing well. I had a bull put spread 52 by 51. Got some income trades. Sold a bunch of puts. So I mean that's income wise, and then I also have a bunch of shares. And so far, I think I'm up a decent amount. IBIT is up around $43,700. Yay! Let's get more. MicroStrategy up to 396, making some fresh highs. I will continue to run with this one. My bull call spread on MicroStrategy. So I'm up about $7,500. I have some shares. I'm still looking to get those shares called away. June is my collar trade expiration. My bull call spreads are each up around $270. Max profit on those around $1,100. If I start to see this trading for, let's say, $600, $700 profit, I'm going to take a winner there. I'm trying to get. I mean, this potentially can pay. I think like 300%, 400%. So if I get 150 to 200%, I think I'm going to be okay taking profit. So we'll see what happens. MicroStrategy has earnings today after market, along with Apple and Amazon. So Apple trading at 212.93, Amazon trading at 189. Still some room for those to still recover. Okay, still recover. I do wonder what job numbers look like tomorrow with non-farm in the morning. That could be, a bit of a, I don't know, maybe a slap in the face to this hot market right now. But that's the soft data becoming, the hard data. Like right now, companies are laying off workers. Companies are scrambling to figure out how they can operate through this trade war and hopefully come out profitable. I know that the U.S. is trying to pass a tax cut right now and try to incentivize that, trying to somehow use tariffs as a way to cover a tax cut. I mean, Doge was claiming they're gonna cut $2 trillion, and they're maybe gonna cut 250 billion. I think Musk is now out of Doge. I think that whole thing that ship has sailed. So I just think the narrative has changed. They started off as like chainsaw, little government, cut spending, get rid of the fluff, drain the swamp, and look at what happened. We break the bond market and we pivot hard, and now everything's positive. It's like the narrative and the commentary is so important to see like how sensitive this market is. But non-farm, the numbers tomorrow are, I think it's adequate. I mean, I think we're looking at like 100,000 jobs. Yeah, forecast for 133, previous 228. I would say the market might be a little more sensitive. If we have a miss, ADP numbers this week were pretty bad. Negative GDP, that was pretty bad. If we have if we have like a less than 100K job print and we have a 4.3, that might start to raise some heads. It really will, because it's showing like, well, this is the trend. We went from a 4.1, 4.2, 4.3. Like it doesn't take much for 4.3 to become 4.4, become 4.5. And that is where the Fed talked about the end of the year employment being like 4.5 was supposed to be the end of the year. So I do see that as a potential issue. So that could also mean that, Wall Street, as this recovered from April 7th, Wall Street's now like taking a bit of a victory lap. Wall Street's, back up and kind of fighting the good fight. Main Street, on the other hand, could be witnessing, more job losses, softer labor market. And this becomes even more accelerated from September onward. Okay. We'll see what happens. Chart alarm NQ hit 2056. Okay, fine. The futures. Broadcom up above the highs. They don't have earnings, but it's just kind of getting a run from MAG7. NVIDIA up to 113. I did another collar trade on NVIDIA yesterday. I think on Tesla, since it has slowed down a little bit, I was interested in selling another call on Tesla. But if I get it called away this week, I'm going to make $6,500 on Tesla at the 257.50. Let me see what that's going to look like. If I go out on Tesla, let me go here. So Tesla, well, that quickly turned. Tesla was one of my crappiest positions. Now it's up 13 grand. Go figure. These are looking a lot better. 245 out to May. I'm gonna sit on this one for the weekend. Let me see what the 245 is for May 16th based on the option chain. 245 right now is it's a 12 delta. So we'd have to have like a nasty spill to the downside based on current option prices. We've already had earnings. Plus or minus out to May 16th right now based on current option environment and volatility is that we'd have about a $30 move from current prices. So that puts me down to about 259. Well, 245 is my line in the sand here. I don't think I'd take another chunk of assignment. Even the strike for next week, if I went out to the 9th, if I rolled my 257, I mean, again, I could roll this and still have it not be tested, still get it called away. I'm just not trying to be super greedy. I'm just not, just in case this market is going to, if this turns, if Tesla, I mean, there's two ways this plays out, right? Tesla either breaks and goes higher, and I'm missing out on some of that breakout, or Tesla uses this resistance and falls. Well, if it falls, it's probably going to be as quickly as it did here. I mean, we know how volatile the stock can be. So what I'm trying not to do is end up taking on another batch of shares while I'm still holding this one and repairing it with a covered call. So if I were to roll this call out again and try to go to the 5/9 expiration, I still get it called away at 257.50 most likely. I could go lower and lower my cost basis even more and just sit on it. But net, I mean, I'm actually curious what a roll would look like right now. So if I put on a roll, let me see what this will trade for. So if I do, these are all looking better for profit. So these May 16th expirations, like this one's looking really good for profit. It's up around 78%. I'll probably sit on this one over the weekend. I mean, I don't think Friday just by itself is going to be a crazy dump day, but if it is, I mean, maybe it's wise to take profit on this just to not worry about it. For me, the extra like $60 is not worth the potential risk. So taking profit there, that would be, 220, 220, 220, another 220. This one's up about $135. I'd like to get a bit more profit out of these if I can. This one it's the same expiration, just a different strike price. So, I mean, the the risk off side of my brain wants to just take all the profit. And I think I'd be okay if I did that. So let me kick that around. I'm still taking on some heat with these wide bull put spreads. Now I got a naked put that is somehow still not in profit. I don't understand. I mean, it's elite, but my God, it's like I can't get any profit when Tesla's up like 20, 30% off the lows. Tesla's up 35% off the lows. I put that in near the high of volatility, and somehow it's like, it's still a negative naked put, which I found that surprising. Anywho, the good thing is there's profit to play with. Let me see what a covered call would look like if I rolled this out to next week. So if I take the covered call here and roll it out to next week, same strike price, I get $2.40. That'd be another $1,000 to the bottom line. So 240. So I get another $1,200 that helped me grab like $7,700 on Tesla. I do like it. It would be about a 13 to 14% chance of the price falling back to next week. I could also go deeper. I could just lower this and say, okay, well, I'll take less profit. I get $4.50, but I'm losing, $2.50. So, I mean, the net is I lower my strike by $2. I get $2.40. Like, that's not awful. I kind of get the full fill. I'm probably losing about 25 cents on that trade if I lower it down. So I get more income, but because I'm lowered my strike price, it's going to be like a net result of about 225 instead of 250. So it's close. So anyway, I'll kick that around. It might be worth rolling. It might just be worth taking all the profit, not worried about the risk. But I also don't mind having some. I don't know, man. I mean, overall, Tesla, it's like I don't mind these stocks that I just dollar cost average in, but I don't know if I want to have like tons and tons of exposure in Tesla. So it's been a good income trade for me. I flipped it once. This is going to be a second time. I don't want to have like 100 shares and then have to flip it with another chunk. So I'm trying to avoid having multiple assignments come together. That's been the story. TLT, let me take a look here, 88.59. So my TLT position is back in profit, which I'm happy with. And let's see. So TLT, it's a diagonal spread. Currently about $1,000. Covered call. It's not a covered call. It's a sell call at 96. We're trading at 89. These are out to July. This is a 2-year. I basically did a 2-year treasury play. So I'm out to January 2027. I'm not trying to hold this to January 2027. What I'm trying to do is see if TLT will, in fact, make its way back up to the recent highs here. So, I mean, I guess we got a little high. This is when the bond market broke. I think at best we're maybe going to see this low holding and maybe a range trade on TLT. So, like I said, not trying to be too greedy on this overall position. But because I've got a couple years on it, I'd like to think that, rates come down, yields come down. Even if it's in the next 12 months, I still have plenty of time to see this thing get back into like let's say the high 90s or early hundreds. I takes profit. But I honestly, I don't love to, I'd rather have gold. So if and when I decide to take profit on TLT, I'm probably going to do more of a split between gold and silver again and add more exposure there. Okay. Anything else for the day? Let's talk. So if bonds are down today, 88.61, bonds are down about 1%. That means that yields have probably gone up. So US 10-year is up slightly. So we're off the lows around 4.12 up to 4.20. I know I just did a lock within 30 days around 6.6 right now for the house that I'm closing on end of May. That might be as good as it gets right now unless we get a surprise move, which I don't think is happening. We do have the Fed coming out May 7th. They're not going to cut rates. That's still kind of baked in like 93, almost 94%. So the watch tool here. Okay. So make sure I'm good on my calendar today. So I'm going to go for like another 7 minutes or so. So 95 point, yeah, there's almost a 96% chance they're not doing anything in May. Let me check Trueflation for a second. What's our inflation picture look like? I mean, it's down. I mean, the market's dropping 20% is deflationary because it forces everyone to cut back. I don't think that the labor market is really reflecting. So initial jobless claims. This is what I've been watching here for the last couple of months. I mean, if we start to see this spiking higher, then that's not a good sign. If we start to see initial jobless claims and continuing jobless claims trending higher, that's not a good sign. But so far, I mean, this might be a little alarming, maybe a little bit. This is continuing jobless claims, but this is like one data point, doesn't make a trend, right? So are we going to see this continue to go higher? If this goes higher, then we should start paying attention to this labor market. But if this continues to go, well, it's up this time and then it's down, then it's up and then it's down. I mean, that's a pretty big swing. But if it levels off, then we're still in that kind of no recession scenario where if there's no real labor struggle, then it's probably not going to be a recession. But this does look like if it keeps climbing, like it's going to be something we should pay attention to. So don't ignore initial jobless claims, continuing jobless claims, because that is going to be a theme for this year. This whole idea of the market going all the way back to the top again, if it happens to me, it's a bubble. I mean, I think if this market gets all the way back to the highs, this is a freaking bubble that is on the brink of broadening pattern. And when we come back down, we're coming all the way back down those lows again. The nice thing is if that happens, you can make a lot of money on the way up still by just a melt up. But if you can, time this over a 1 or 2 year window, there's a fortune to be made in that. And it also could be done with a very small risk. I mean, I could probably risk $1,000 to stand to make maybe 30 to 40 grand. There are ways to position for that, like massive reward to risk. And that would be great because up here, it's like, I'm very cautious of how high this market goes. And it just is the same story. It's like cautiously bullish, climb the wall of worry. Am I just stupid for fighting this market? I don't think I am, especially if, real data becomes earnings compression, labor market slowdown. I don't know, all the stuff. So as I've said this whole week, I am cautious right now. We are back to the 200-day moving average. We still have a majority of the S&P 500 below the 200-day moving average, which means that the broader market's still in a bit of a bear market until everything is back above the 200. So if we have, 50+% of S&P stocks greater than the 200 moving average, then I could say, okay, maybe this is going to be a full-on recovery. That's the slow lagging timing, but maybe we're there and we're going to see some market breadth. But if this turns hard, then we never get the market breadth above the 200. And this is just a matter of this was a nice recovery, but here we are right back in the middle. It's not at highs, it's not at lows, and this is no man's land. That was literally the title of my session yesterday. No man's land. It's like, what do we do? We're not bullish. We're not crazy bearish. We're just in the middle. And maybe that's where the market's going to be stable for a little bit, but it's not really going to give any sense of direction. So just saying it could be a little more difficult. Okay. All right. Any other charts? We did dollar, oil, gold, silver, all currencies. We did the indexes. I didn't do the Qs real quick, but Qs are up as well, just above the 200-day moving average. I measured this one out at NDX, I think. Yep. So symmetry plays. So low to high, higher low to higher high. We're getting right there towards that March high. So that would be some resistance on the NDX. QQQ, same thing. We have some gaps to fill. I mean, now that this gap is available, this gap is available. Does it run into some resistance here? Do we pull back into those levels first? Right? It doesn't have to be like a full-on bear move, but I do suspect that we would have some type of retracement. What's going to be the call? I have no idea. Just maybe profit taking. Maybe some bad news pops up. I have no idea. If the market keeps going higher, it does make me even angrier that this is what happened. Like this didn't need to happen. If the market's going to all-time highs, this didn't need to happen. All it did was scare the crap out of everybody, blow up some accounts. It blew up like everyone that's leveraged. If you're leveraged, a lot of accounts are blown up there. The basis trade, it's one of the biggest providers of liquidity in the bond market. It blew up. and somehow it's like, yeah, we're back to all-time highs. Like, I'm a bit of a realist here. It's like, I know how disruptive these silly events are. Um, and how do we fix it? Well, the narrative changes and there's more fiscal policy. Like, that's it. There's no monetary policy coming in right now, but the global liquidity is increasing. Fiscal policy is increasing. Um, and it's, we're being told that we just drained the swamp, which we didn't. Like, we pivoted so hard on that April 7th, April 8th, April 9th window that I don't know if the market goes back up, right? Market goes back up. It's just very disruptive. It conditions traders yet again to buy the dip. And I'm just telling you, be prepared for that next correction to be a legitimate bear market, that you don't buy the dip, right? That's the one that comes in and lower highs and lower lows and lower highs and lower lows. And that's the pain trade. Could be, a nasty bear market with a reality check. But I'm not going to call that right now. I'd feel much better calling a bear market when we're sitting here at crazy all-time highs and a price to earnings at 25, 26, 27 PE. Then sure, I'll be a little bit more toppy in the markets. But until then, it's like, well, enjoy the ride. Okay. All right. I don't know what's going on in the chat here. I just see a lot of crazy comments. So I think I'll wrap it up there. We did all currencies: gold, silver, Bitcoin, indexes, stocks. We got earnings today on Apple and Amazon, so keep an eye on that. Non-farm payroll tomorrow morning, forecasted for 133, and average hourly earnings at 0.3, unemployment rate 4.2. Like I said, I'm going to be watching initial jobless claims, continued jobless claims. Let's see what the numbers give us tomorrow. Is this going to make the market flinch like GDP did this week? The market clearly flinched, but it wasn't enough. I mean, we still had MAG7, which is stronger. Wall Street's still up. And, the core PC coming down was seen as a good thing, I suppose. Also, Trump tweeted something yesterday, or I don't know what the hell he said yesterday. I don't know. It's every stinking day. So, but negative GDP is a flinch. So is non-farm a flinch? Maybe. We'll find out. Okay. Sounds good. Have a good day. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.